It's Mike from MJF Invest. How you doing? Thank you, Art Daly. Joined the live stream pretty early there. Make sure you tap that like button. I wanted to go over a couple of things during this live stream. I want to talk a little bit about the stimulus, why that makes me more bullish about Bitcoin. I also wanted to discuss valuation and discuss models and working within a framework of valuation. Um, I feel like I'm guilty of it myself. I feel like I've been subscribing to what Ashwath Damodaran. I picked this book up at the local bookstore for 50 cents. It's a investment valuation. It's the university edition from NYU when he was a professor there. And he also has a YouTube channel. He Instead of watching other YouTubers and always watching people amateurs, why don't you watch, start to implement people like that, in listening to what they have to say. Ashwath Damodaran, Peter Lynch, Ray Dalio. I love watching other YouTubers as well. I watch several, but I also like to mix it up and hear different perspectives. But this book really blasted me in the face with like a realization. It's like, wow, man, like hit me with some real clarity right away on page one. Um, it says a philosophical basis for valuation. He says a surprising number of investors subscribe to the bigger fool theory of investing, which argues that the value of an asset is irrelevant as long as there is a bigger fool around who is willing to buy the asset from them when it's time to sell. Um, while this may provide a basis for some profits, it's a dangerous game to play since there is no guarantee that such an investor will be around when the time to sell comes. And that's very true. And especially when some of us growth investors, we're looking at a lot of these growth stocks. You know, what does Peter Lynch say? Oh, I bought that because I thought that sucker was going up. That's me and my buddy were texting about that before. And that's just a philosophy and a theory that I think a lot of people are falling into, right? And that's not really giving yourself the best. You're not putting the odds in your favor for long-term success, right? 2020 was a pretty remarkable year. It was an extremely bullish market, extremely bullish. A lot of people made a lot of money, right? And everybody's a genius in a bull market. But these cycles come, and if you're going to invest for the next 10, 15, 20 years, that's what I plan to do that. We're going to see cycles where what just happened for the last 2 weeks can happen for 6 months, a year straight, like that. Can you imagine? These bear cycles come, despite what we want, despite what we like, and I'm going to touch on a little bit. It seems like the government is interfering and with both, they're not allowing bear markets, right? They're just going to keep printing money through it. I'm going to get to that a little bit later in the video, but first I wanted to, stick with valuation and the importance of working within a framework, of how you're valuing your company, right? Not necessarily without listening to analysts, right? Like these analysts have their own way, to value companies, and obviously they're pretty good at it. I mean, over a long period of time, but to be able to have a basis for yourself, especially in the growth sector, I don't really see that many great analysts that could pick growth stocks really well. So learning this stuff, learning valuation models, and applying that, and over time, through experimenting, you could certainly develop your own strategy and your own models. I wanted to discuss a company that I looked at the other day called Accelera Biologics. I'm sorry, ticker symbol ABCL. The company is a really, really interesting company. It's $8 billion market cap, but I went through the S1 filing, and that's usually where I start. I usually start in the company's SEC filings. There's a great website that has all the SEC filings in one location called bamsec.com. You could type your ticker right in, and all the SEC filings, annual, quarterly, ownership, prospectus, all that stuff, proxy votes, insider buying, all that stuff is all right there, all the paperwork. So, I started with the SEC filings, and in the S1 for ticker symbol ABCL, I had seen that they have 97 targets. So I know that they have 97 drugs that they're targeting. Okay. So I went and I found out. Now this is where due diligence comes in and being, assertive in gathering the information. So according to MIT, I found out that 15% of drugs that are in clinical trials actually get approved by the FDA. So only 15%. So keeping that in mind, and also the drugs that get approved make on an average of $65 million of revenue per year annually. Okay, so knowing that, so 97 targets, rough number, 100, 15% of that. So let's say they get 15. So I'm saying they get 15 drugs approved, right? Times the 65 million, that gives me $975 million to work with, right? Based on a contract that ticker symbol ABCL had with Eli Lilly, they developed a drug with Eli Lilly, and in that contract, you could find that they were paid for 12.5% of royalties for that development. Okay, so I used that number, 12.5%. Okay, so out of the 15 drugs with 60 at 65 million, giving me 975 million, using 12% of that to AbCellera, that brings me to about $100 million of revenue by 2023. Okay, still a small company, still a young company, yes, but with a 30% growth rate now, and this is where you got to kind of try to make an assumption. You want to make an assumption the best you can. A bull case would be an aggressive assumption. I think the company is going to grow 40, 45%, something along those lines. A base model where you say, 35% seems about right. That's where they're going. You go with a conservative, which would be, your lowest model. So using the lowest model, I use 30%. That would bring them to $500 million of revenue by 2030. Not a very strong number, but with 40% growth year over year, that brings them to $1.2 billion by 2030. Okay, and then trying to gauge it. So I know, that's where I get my $1.2 billion from. And then you got to look at the industry that they're in. A mature biotech company trades roughly, 8 to 10x price to sales. So you're looking at like a 10 to $12 billion market cap with what they have now, right? So they're sitting at $8 billion. They're sitting at an $8 billion market cap at the moment. I could see 12 billion right there with what they have. Now, you want to try. You got to ask yourself, do you want to take that leap of faith? You assume they're going to get more contracts and more targets, which would in turn bring more revenue. What I really like about this business model with them is that it's royalties. Royalties can compound, and these royalties are for a lifetime. So they have room for exponential growth. But that's a pretty good place to start. Again, I'm no expert. I'm no wizard or anything along those lines. But if applied, just considering you're looking at the overall market, market share, and then making an assumption as accurately as you can, and you want to use the information as accurately as you can. For what kind of growth rate you're going to get. And this way you could forecast and project a little bit, right? And get an idea as well if some of this stuff may be priced in, right? And if we're not working within the framework of some type of valuation, then we're kind of falling into the bigger fool theory. And I don't believe that's sustainable for very long. So I just wanted to put that out there. That's the type of stocks that I'm going to be looking for. That's the kind of model that I'm going to be using for my growth stocks, looking at the total addressable market share, and then looking into, an accurate growth rate. So, and then also the last step would be looking at the industry or similar companies. Sure. Yeah, absolutely. Absolutely. With BNGO, what you would want to do is you would want to look at their most recent quarterly report. Okay. You look at where they're at. but the thing with they're a growth stock, so you're going to want to the price to sales metric may be difficult with them because they don't have a lot of sales yet. So they're probably trading at a very high price to sales number. Something they're probably, if I'm just guessing, they're probably trading at like maybe 100x price to sales, right? Because they don't have much sales yet. Maybe something like that, 50x price to sales. They're probably trading at a high price to sales. So that would be a tough one. But you could look at their revenue, especially their yearly revenue, is what you want to look at, and then you would apply and ask yourself, look at the guidance, right? What are they projecting for this year? Are they projecting 15% growth or 20% growth or 50% growth? Or you assign a number that you feel comfortable with, that you think they could hit, and then you look and ask, is that revenue usually about 10x once they mature? So whatever they're trading at, they're going to need a lot of revenue to stay that high, at some point. So price to sales seems like the best metric. Find similar companies with similar margins in the same industry or hybrid type industry. But if you could, if you find a company with similar margins, you could ask yourself, this is the kind of growth, that's possible. And again, it's assigning real, you're trying to make assumptions with the information. That's all. That's it. That's what the forecasters are doing. That's what the analysts are doing. Obviously, they're better at it. They're professionals, right? But that's what it's time for us to get started doing this. This is what retail investors need to at least start doing. If we're, like I said, if we're going to be doing this for 10, 15, 20, 30 years, you're going to have to be working within a framework of valuation, and again, I don't want to be this. I don't want to be applying to the bigger fool theory. I don't. And I was guilty of that a lot of 2020 and maybe too, I neglected financials. I neglected margins. I neglected the balance sheet completely because, everything was just flying, and I picked up some bad habits and I want to correct that. I want to, I also want to promote on my channel, it's not always going to be like this. It's not all, rainbows and butterfly kisses. It's not, it's, there's going to be some difficult times. There's going to be some down markets. But with that being said, even in down markets, if you could pick the winners, you will still make money. Looking more into valuation, making your own models and working within a framework. What works for you, right? Experiment a little bit. What metrics work well together? Obviously, you can never point at just one metric. Certain metrics work well together, but like I said, with growth stocks, price to sales seems to be a good one. So again, looking at the total addressable market, market share, and then assigning, an annual growth rate, something that you can anticipate. Keep an eye on the company too. They'll tell you what they're expecting, right? Like they'll, if you hunt the information down, you'll see what like BNGO expects, like what their guidance is, what they're anticipating. Keep an eye on those numbers, every quarter. Keep an eye. Are they hitting those marks? Because if they're not hitting those marks, that could be an indication, might be time to go, so paying attention to that and then always reevaluating as well. That was pretty shortly after page 2 or 3, right away in this book. Valuation models do not withstand the test of time. They're not like a one-time thing. Markets constantly change, prices constantly change and get adjusted. So you will need to revisit your stocks. And that's why I also suggest not overdoing it with your portfolio. You don't want to have 30 companies in your portfolio, 20 companies, 25 companies. You want to keep it nice and small. You want to keep yourself 8 to 10 stocks that you really know and understand. And you're constantly reevaluating. Do I want to keep this? Are they hitting their marks? Are they growing at the way that I expect? Are they pivoting with the times? Or are they increasing their margins? Is the business behind the stock doing what it's supposed to do, right? Because I got news for you. Stocks don't only go up. Whoever told you that lied. Finding good companies and elite businesses is a good way to avoid, these major, these big corrections and these big crashes, So, and again, we may be sending emojis to our friends, rocket emojis, and Richard Shepard. Concentration makes money. Diversification keeps money. Yes, I would go with that. Yes. Oh, I'm all about diversification. I hope you didn't. I hope it didn't come across like, oh, just own two companies. No, I think 10 to 12, 8 to 12 is like the sweet spot of, for me anyway. If you can manage more, bless you. You know what I mean? But that seems like the sweet spot for me, that I can pay attention daily to what's going on with my companies, right? Like, because that's the kind of investor that I am. That's the kind of investor I want to be. So, I want to be able to know what's going on daily. I want to be on the earnings call, the earnings webcast. I don't know how people own stocks and they're not sitting in on the webcast. Like, I don't know. Like, what are you doing? Like, I keep hearing people throw stocks at me like Sundial Growers, SNDL. And they're like, oh, Sundial Growers. And then I look at it and I look at the website. I go, this website is shady. They got negative margins, right? Negative margins. This company bleeds money. Why on earth would they go up? I don't know. But it did. It went up, and it went up like 5x. So that's the kind of market that we were just in. Now, I don't know. It may go right back to that. We may have a similar scenario this year. But this is a pretty good segue into the second part of the video, I think. But what's going on right now is that there's clear government interference. They're not allowing a bear market. A 1.9 trillion stimulus was just passed. We've literally printed 30% more money in the last 2 years now, which is just absurd. Out of thin air. You can't do. I don't know to what extent people understand how economics work, but that's not good. You can't do that. I know people are in trouble and there needs to be a solution. So that's not the debate that I'm having. The debate that I'm having right now is they're diluting the crap out of our money, like bad, like really bad. And when a lot of that comes, because if you look at some of the reports too, the M1 report, they're printing all that money, but none of it is hardly any of it's in circulation. A lot of it is in securities and bank accounts. So, that could indicate there was some inflated securities, what we just saw possibly. But when you start to think of what's going to happen when that money enters the economy, that's going to raise the prices of stuff for a little bit. Jerome Powell went on record just last week and said that there will be inflation, but it will be an adjustment period, not a long, drawn out, recession or depression. So, that was a positive sign. And, I'm a little bit concerned about that. I currently own, my portfolio right now is 5% in crypto only. 5% is all I have. I have 3% in Bitcoin and I have 2% in Ethereum. And I have two full tokens of Ethereum. So I was thinking about possibly taking crypto a little more seriously. And I know it's hard to cut through all the nonsense because it's like a religion to some people, and then some people are totally against it. And being an investor, I want the truth, right? And I want the facts, and I want to deal with that. I don't want to deal with somebody who thinks Bitcoin is a religion, and I don't want to deal with somebody who's going to just tell me that it's garbage. Like, oh, blah, blah, blah. I already know, like, that guy's an idiot, and the other guy, both guys are idiots, So I want to find out really what it is, and I started studying quite a bit, and I really fell in love with the technology back, I don't know, 3-4 months ago. And, I was gun shy. I didn't jump in. I jumped in at 30. I wish I jumped in at 18. I don't own a full Bitcoin. No, I have a portion. It's all, like I said, it's only 3% of my portfolio. But I am considering, like I said, taking more money out of stocks and into cryptocurrencies. Over the last decade, cryptos have just gone up consistently. They've pulled back, but over the last decade, there no assets that perform this way. Bitcoin is over the last decade is compounded at a crazy rate. I wish I got into it way earlier. I didn't. But I'm considering heavily to moving more money of my portfolio into cryptos, and specifically Bitcoin and Ethereum. I don't like the idea that the government just keeps printing money. I just don't. Bitcoin is finite. 21 million will be in circulation. Nobody can dilute it. Um, and the technology is beautiful. Yes, I guess there is risk because maybe something better will come along. But when people the argument a lot of people make is, oh, the government's going to come along and do it, and just that argument alone, like, you don't understand how decentralized works, right? You can't centralize a decentralized network. It does not work that way. The network becomes stronger because it is decentralized. It becomes very vulnerable to attacks. Your money would never be safe in something like that, especially the age we're going into with quantum computing. And that is something too, as Bitcoin investors, you do have to pay attention to that, because I did read that right away in the Satoshi Nakamoto white papers, which were really cool. And that's such a brilliant paper. You got to read that to really like try to understand Bitcoin. And they talk about a little bit of fear once quantum computing kind of comes into play. So a couple other things happened during the week. Pure Storage also got some more upgrades. Deutsche Bank today raised their price target to $30 a share. It's a bullish sign. They raised it from a hold to a buy. Looking into a lot of the moves Pure Storage is making, I'm becoming more bullish and more bullish by the day. I bought the dip, the last 2 weeks. I added a lot of Pure Storage. Q4 earnings were fantastic. I expect really good earnings in Q1 again. There's a great paper that I just read by Harvard Business Review that they wrote about storage as a service. Really fascinating. And finally, I was like, yes, Harvard finally caught on, because I've been screaming about Pure Storage for a little bit now, and I'm just kind of waiting patiently for Wall Street to pick up on it, or retail investors to pick up on it, somebody to pick up on it, and I just think it's a really undervalued stock, has a lot of upside. It was going very cheap the last 2 weeks. But again, if you're in the live stream, please tap that like button. Again, I'm talking about valuation models. I gave an example earlier on in the video. I don't know if anybody has anything they want to ask, or anything they have on their mind, anything they want to talk about. Drop it in the comments if you do. I'm open for discussion. We talked about Pure Storage. I went over the Abcelera model. We talked about Bitcoin. 1.9 trillion reasons Bitcoin will go up. It was exactly what I think. And that is the stimulus. And again, I'm not necessarily, go put all your money in Bitcoin. But I do like it as a store of value. I do like it as a hedge. I do like it as a currency. I like it as all those things. I like it as an asset. So Bitcoin is all of those things, and that's the beauty of it. Let me recommend this as well. If you're going to buy Bitcoin, don't buy Bitcoin on Robinhood. Don't buy Bitcoin on Coinbase even. Buy Bitcoin from the blockchain. I own my Bitcoin on something called Gemini. So I actually own Bitcoin. I don't own the volatility of Bitcoin. Like if you buy Bitcoin on Robinhood, like, you don't own Bitcoin. You don't own Bitcoin at all. So keep that in mind. Look into it. And if you're going to get involved in blockchain, in Ethereum or Bitcoin, do it through Gemini. There's one other one as well that you could get it right from the blockchain. So, I wanted to throw that out there. What else did I want to talk about? Does anybody got anything? Anybody on the stream got a question or anything they want to talk about? Trying to see here. Concentration makes money diversion. No, okay. If you just got in, make sure you guys hit that like button. And if you're new, subscribe to the channel. I took a step back a little bit on the amount of content I was making. I've been really doing a lot of studying, man, about valuation and building my own models. And I just feel like it's going to make me a better content creator and be able to help an audience. And I don't care how big the audience is, even if it's just a few people. I don't care. I'm not necessarily in this for a big, huge audience. Has my portfolio recovered the last few weeks? All right, I was down 40%, 41%, man, from all-time highs. I shouldn't say I was down 41%, because honestly, I'm up big, over the last year or whatever. Hey, Sean, thank you for joining, man. Thank you for joining, Richard. So from all-time highs, I was down roughly 40%. Today alone, I made a big chunk of that back. I was up about 17% today. So I was up almost half of that already. It was recovered, thank God. But that, and again, I don't want to be too, nearsighted. Even if we get a pullback tomorrow, the day after, the rest of the week, whatever, at some point things are gonna level out, and they're gonna look good for a little while. But again, be weary. Down the road. Yeah, Shamat's backs are killing me, man. Can I just say too, and I love Shamath Palihapitiya, you guys know that if you've been watching my work at all. He was a big influence, man, on me in the beginning. I just made a video too, and I really respected that he walked us through how he looked over his portfolio. And I still love and adore Shamath and respect everything that he does, but it's going to be hard for me to take a bet the jockey approach and just blindly go with him, which I've been willing to do in the past. I have been willing to do that, just blindly. Like I owned IPOF and IPOD just because I was like, you know what? Whatever he attaches is going to be better than, $12 a share. I know it. But now I don't know it. And you don't even know if he's going to be there. If his portfolio takes a hit, he showed you what he's going to do. He said he's focused on climate change and inequality. So I made a video and said, pay attention, so your portfolio should have an overall theme, right? Like I'm a growth investor and I invest in innovation. So he's focused on inequality, companies that can solve inequality, and companies that are solving climate change. So if you own any companies that aren't involved in that, in those two sections, like Virgin Galactic was a space tourist company. I own Metromile. There's a couple other ones that's not related. He basically said like, okay, well, if we get into a bear market, I'm gonna bail on these companies. You know what I mean? Like, so I'm not blaming him for that. I would probably do the same thing. You got to stay true to your, to your overall portfolio, the theme of your portfolio. But if I'm going to be taking a bet the jockey approach with somebody, I got to know that they're going to be there, right? I don't know if that makes sense. So yeah, so his SPACs are killing me, and I don't know how much. Maybe other people are. I don't know if other people are starting to feel, how I'm feeling. I'm a little bit like, but maybe some of that's showing. I don't know if he's getting some pushback from Wall Street as well, because he's kind of tried to take the voice of the retail investors. I don't know. And I don't know if he's getting a little blowback from Wall Street from that, So, I'm reassessing, my stance on Shamath. And I was just talking about that. I don't know if you were on the stream a little earlier. I went over and I built a model, a valuation model for ABCL a little earlier. And right after I had said, models don't, in investment theses don't really withstand the test of time. You constantly have to be reevaluating them, right? Pricing's constantly changing. Projections are constantly changing. Disruption is constantly happening. So you got to be very active with your portfolio and reassessing your companies. Maybe once a month, maybe once every 2 weeks. Building new models, looking more and more, and working within a framework. And keeping valuation in the back of your head, Again, I fear, I've been trying to read some of the stuff that's happened in the past, because I lack the experience. I haven't lived through a bear market or a down market. I haven't, I've only been doing this 2 years, not even, 2 years. So I don't have no experience in a bear market, but I know I don't want it to deter me or knock me off my track. I want to be prepared for it. And I want my portfolio to be, equipped. I want good businesses, not just stocks that are going to go up. I also said earlier, a buddy of mine, we were texting, and he said to me, "What's Peter?" I was telling him, about the bigger fool theory, and it's just, you don't care what the price is, you just know that there's going to be a bigger fool at the time. And I don't want to be that anymore. I don't want to play that game anymore. I want to buy businesses that are undervalued. That's what I want to buy, and that's what I want to look for. And if I can't understand valuation, or if I don't know how to value a company, How can I do that? How can I sit there and say that's undervalued if you're not working within a framework, you know? So a little earlier in the video, if you just got on, I walked through a valuation model of ticker symbol ABCL. Just a brief summary again. You're going to look at like the total addressable market, and then make try to make accurate assumptions, by using the information that you have. What kind of growth rate are they going to have? What kind of market share are they going to get? And then look at the price to sales, see what the industry is trading at or similar companies, and see what it is. So if you get 1 billion in sales and biotechs trade at 10x, mature biotech trades at 1x or 10x price to sales, and you could see 1 billion in revenue, you could get to a $10 billion market cap. Does that make sense? And each sector is a little bit differently, that's really it. And finding stocks that are undervalued is really important to me right now and really on my radar. Because like I said, I want to be able to make some money despite market conditions, despite bull market, despite bear market, despite, what the next guy's doing, and I really, don't get me wrong. I love YOLO trades as much as the next guy. I really do. But that should be for a small part of your portfolio, right? Like a real small, 1 or 2 of them, fine. But you're holding on to 4, 5, 6 penny stocks. You probably just got hammered the last couple weeks, but you'll continue to get hammered every time there's a correction. Every single time you'll get crushed. Bad, businesses that don't have the financials to back up their valuations are the businesses that get hammered during corrections. They get crushed. Make sure there's a business behind that stock. Know that business, understand that business, know their growth projections, and make sure that they're hitting them, right? And again, it's in a bull market, everybody's a genius. Everybody made 100%, 200% last year. Everybody. How are you going to do this year if this happens 2, 3, 4, 5 more times? You got to know what you're doing, right? And some guy on YouTube told me it was going up, just isn't going to cut it. Being able to do this on your own a little bit, picking your own stocks, man. I see a lot of guys out there with big audiences and big channels, and they're giving people garbage stocks that you could look at in 5 minutes and just go, holy crap, that's no good. That's bad. Like, I don't care if this goes up now. This is going to come tumbling down. You know what I mean? So being able to get your own, gather your own info, gather your own stocks, and building those models or having a framework to work within to gauge, is this already priced in? Is this not priced in? Whoa, this is way undervalued. That's the kind of content that I want to make. I've really been studying that the last couple of weeks. The last couple of days specifically, it's really starting to come together. I'm starting to understand it. No, I'm not an expert, but with some more experience, I will get good at this. I know I will. And I just know how I am. I work really hard, to do it. Like I won't do anything else until I get good at this. So I'm going to figure this out and hopefully I could teach it, and teach it because I feel like this information is valuable and timeless, and it's the type of stuff that can change generations. It really can. It can change people's lives. So it's important to me to do, and I feel responsible too. I want to bring good stocks to if I'm going to be making content about this, I want to be bringing good stocks to people. I got to be able to sleep at night, and giving people stocks like SNDL. Like I won't be able to go to sleep at night, and revenue growth rate of 59%, resulting in revenue 2.5 billion. S&G decreased by 31. Oh, great. Let me see this here. I've been burned by the marijuana space, so I'm hesitant to get in, but GTEC is making me really want to. They are one of only a few making money right now. Revenue growth of 59%. Revenues of 2.4 million. S&G 31%. Average selling price increased by 13%. Gross margins. What kind of gross margins? Adjusted EBITDA. But with gross margins, don't look at the adjusted EBITDA. Look at the I would want to know. This is what I would want to know, and I don't know that company. But everything you just said looked really good. What I would want to know is what kind of debt do they have. If they're carrying debt, I would exit out right away. If they're carrying debt, I totally would. You said their adjusted gross margins. I would want to know what their gross margins are. I would want to know what their path to profitability is. Like, what's their well, I know the total addressable. Well, I know what the TAM is, but I'm saying I would want to know. But the problem with the total addressable market is winner's going to take most. You know what I mean? Like it's a big total addressable market. We know that, but winner's going to take most. Keep that in mind. It won't be. It's not going to be a very fragmented market. I don't think. So like these companies like sundial growers and this and that. I don't want anything to do with companies like that. Although you can make money with them, obviously. Obviously, I've made money with companies like that myself in the past. So I'm just saying, I just kind of want to shift away from that bigger fool theory, and look for that. Like what you just said, you just gave me numbers, right? You didn't come to me like, oh man, they might have a partnership with this one coming up, waiting on news this way and that way. You know what I mean? So that's the kind of stuff I'm talking about, Sean, actually. So that's great, man. And that sounds good, but like I said, I would want to look into that one. Look at ECB. Okay. I certainly will. But that's what I'm looking for. I want companies that have the financials to back it up. I want 10x potential. I have to disagree with Canada's being a winner take most industry, at least not for a while. Okay, fair enough. Fair enough. I could be wrong, it wouldn't be the first time. Quantum computing bought in man, hey, I wanted to ask you about that one before it takes off. Any thoughts? I was looking at that one. That one's the Ion, right? IONQ, I think is the name of that one. I just found it. I wrote it down. It's right here on my list to look into to start my DD. I have a little list that I say dig, and it's on there. And just from a glimpse, the brief glimpse I did, it looked really good. But the problem is SPACs are I don't know, man. I was huge with SPACs. I was big on SPACs, but now that I'm starting to see how some of those deals are structured and stuff, I want to pay attention to that too. I would want to see like how that SPAC was structured, and pay attention on that end. And also too, I want to look into the financials of the company, as well. Has there been growth there? I know they're pre-revenue, I'm assuming, So there's a couple of questions that I would have with that, but I'm going to get into it, and I'm probably going to make a video about it. That was the first thing, whether I like it or not. That was definitely something. As soon as I read what it was, the overview, I was like, oh, this sounds like a great company to talk about on my channel. So thank you for mentioning that. And quantum computing is pretty wild, man. That's that's when we're like officially in the future, the future, like for real, like in the future. Great. Hey man, no issue, just voicing my opinion. I appreciate the info you're giving out. Oh, no problem, man. Yeah. No. Oh man, I don't take any offense, bro. If I say something wrong, put me in my place right away, man. I don't got any problem with that. Taking Rocket Labs USA. Cool. And if you guys are new to the channel, make sure you hit that subscribe button. We talk about growth stocks on this channel, but I also love the research. I love talking about research, and I love the process, right? Like I don't want to just ever talk about like, yo, go buy this, yo, go buy that. Not that I haven't done that or wouldn't do that, but I would prefer to make this information universal, right? And push it out there. And my theory on this is like, if I can do it, anybody can do it. And and I want my channel to kind of be like a timeline of that. Like when I started this whole thing, like I didn't really know. I was just kind of buying stocks because I thought they were going to go up, right? I was recording with my cell phone, and I learned a lot of stuff along the way, like on the technology end. But I learned a lot on the fundamentals and how to trade. And the whole thing was always like, if I can do this, anybody can do this with time and effort. Now, I know that I have I'm willing to put effort in. So, but and assuming that if you're willing to put effort in, this can be done by anyone. That's my thoughts, and that's kind of was my theory, and that's kind of what I'm hoping. I really hope that. I hope that'd be a symbol of that. This whole channel and the audience to be a symbol of that, and learn and grow as investors together, right? And again, my audience doesn't have to be big. I don't care necessarily about that. Don't get me wrong. I would like that. I would like it to be. But if it's not, I don't care. Even if it's just a small few people and we share, I'll share it all, And that's where I was getting started with valuation. And I hope to get really good, get better at it. Again, there's more people on the live stream now. Again, if I don't know who's interested, but I'm going to go through a quick model of Accelera bio that I made, which is ticker symbol ABCL. If anybody doesn't know how to do valuation or work within a framework of valuation, I'm not going to lie, I was buying stocks because I thought they were going to go up for a while, and the market was bull and I made money doing it, but I know it's not sustainable, and momentum trading is not sustainable. It's just really not. You're going to hit market cycles that are rough, man. What just happened, like I said, a week for the last 2 weeks, that could go on for 6 months. That could go on for a year. It has happened, and these cycles happen. 2 years bull, 2 years bear, 2 years bull, 2 years bear. So it's going to happen at some point, one way or the other. So having a way to work, a valuation model to work within, I feel like is really important. I touched on this a little earlier in the video. That's for Sean. What are your thoughts on VACQ or HOL? That's what the QQQ was crazy. Great. Okay. It's talking about not being the bigger fool, not just buying an asset like thinking the price is irrelevant, right? Like it's irrelevant. I'll sell it higher later. That's not. I don't want to continue to do that. So I first and foremost starting in the company's SEC filing. So in their S1, I went to Accelera bio, right? I found that they had 97 targets. 97 targets, easily found. So I went ahead and I looked at according to MIT. So this is where a little bit of due diligence comes in. I hunted down some numbers. And I found out that 15% of drugs that are in clinical trials get approved by the FDA. 15%. Okay? And the average is $65 million. The average FDA-approved drug makes $65 million a year. So it's pretty easy math right here, basic math, right? I have about 100 targets. 15% of those are going to get approved. And I'm going to make $65 million on each one. Based on a previous deal, again, I went and acquired and found the information. Based on the deal, Accelera gets 12.5% in royalties from Eli Lilly. So that was the number that I used. So when I use that number, 15 times 65 million, I get 975 million. Now I know that 12.5% of that is Accelera's, right? So that brings me to roughly $100 million of royalties by 2023. Not a good number, no, not a high number, but we're getting there. Keep in mind, though, with 30% growth, that would bring them to $500 million worth of revenue, plus compounds by 2030. Not so good. But with 40% growth, which is a number I definitely think they could hit, I get $1.2 billion in revenue, okay, by 2030, plus compound, plus new contracts and everything. But I'm just talking about what they have currently. So that could get me, and then what you're going to do is after I have that number, 1.2 billion in revenue, I look at price to sales metrics in the biotech sector. You find out a mature biotech company trades at about 10x price to sales. 1.2 billion brings me to a $12 billion market cap. So looking at ABCL, they're at an $8 billion market cap now. I could see a 12. Plus whatever else they get. Can that get me my 10x? I think it could get close, right? Because this will compound this. But that's basically how I got there. So that's what you would want to do. In each industry would be a little bit different, right? Like I said, a mature biotech company trades at 10x price to sales, but a grocery store or a brick and mortar retailer more like 2x price to sales or 3x price to sales if you're lucky. So each industry and each sector is going to be a little bit different. So it's going to take some due diligence to get some of these numbers down. But just with basic math and a little bit of effort, I think you could start to build some of these models, experiment a little bit, use different metrics. Particularly in the growth sector, man, everything's being disrupted, right? Why can't stock analysts be disrupted as well? I haven't seen any stock analysts that really are good at analyzing growth stocks. I haven't seen any, or that many anyway. So why not us, right? One of us can do it. maybe, you know, and figured out, you know, the thing. So try it out. You know, worst case scenario, then you'll have an idea of what a company is valued at. And then you could ask yourself too, you know, whoa, like what the heck did I just buy? You know what I mean? You know, you'll see, you know, we bought a lot of, and they still are, a lot of stocks are overvalued, you know? And that doesn't mean that they can't keep making money. You certainly can. But the problem is in a down market or market corrections. You get the, I'm a believer in future growth. I see the world going that way. So long term, both will pay off. Yes, that's what I believe, Richard. Karen was insane, quite fishy, to be honest. What happened here? What I miss? A friend bought into whole MJS. I talked about it. To be honest, I wouldn't mind getting in the bulls very soon. Yes, what companies are we talking about? Let me scroll up here. Oh, okay. Oh, HOL. Hey, thanks for saying that, Sean, too. That's nice of you, man. Hey, Richard, I out of all the space stocks, too, that I was looking at, I think HOL is a real good one. And I'm not that familiar with the other one. VR, I don't know anything about it. But whole looks pretty good. I like a lot of stuff about them. Um, and I like the fact that the TAM in VACQ, I'm not familiar. I don't know what it is. I'm saying I don't know what company it is. But you know, and again, looking at companies that are overvalued, finding companies that are undervalued by building some of these models is a real goal of mine. You know, and I would love too for you guys to start your your own process, your own strategies. We could compare, you know, and we could talk about that, you know, and that's something that I really like. My main concern with Whole hasn't had successful orbit and loss. Yeah, and that's why I haven't put my money in yet. But you know, their total addressable market is huge, you know, but it's so speculative, and I'm trying to look into a bunch of space stocks. I do want to own a space company. I'm not necessarily in a huge rush though. I looked at a few. I'm going to continue to look at a few more, but definitely going to I'm going to add one, and I'm hoping I can hold off long enough until SpaceX gets public, because I do believe at some point SpaceX will be public. Hopefully sooner rather than later, but either way, that would be the company that I want to own. A couple other things. What else do we want to talk about here? Aqua Bounty reported earnings today. That's a company that I like long term. I'm trying to pick my space stock too. Yeah, I haven't picked one yet. I haven't. I would be SpaceX. Out of what's available, HOL still, as far as like business model goes, because Richard was right when he said that they don't have a successful launch into orbit, so that could be very difficult. That could be a big problem in revenue, right? From this weekend, facts. Crypto, any investment in SIP, Ripple, or currently I have 3% of my portfolio in Bitcoin, and I have 2% of my portfolio in Ethereum. And I discussed at some point during the live stream that I was seriously consider maybe moving more like 10% of my portfolio into crypto. The two that I like, because the two that I understand are Bitcoin and Ethereum. Now, the problem with the other cryptos is I wouldn't know the difference between a good one and a bad one. Like what? I'm assuming it's efficiency. The technology, obviously, right? The blockchain. But I don't know how to say like this one. Like how do I find out if Ripple is better than Stellar? You know what I mean? I know this is what I know about Ethereum. I know that Ethereum, as far as like if you want to tokenize something, they're the best. They're amazing. They're amazing. Their network is amazing. It's tokenized. I can see real estate. Things of that nature being with Ethereum. Real person to person, peer to peer. Really going with Ethereum, like true peer to peer. Like Uber's gone. I'm gonna give you a ride, you're just gonna pay me straight up. We're just cutting Uber right out, like type of shit. That's like Ethereum, we just exchange tokens. Bitcoin, currency, a store of value, an asset, however you want to look at it. And it's finite, and I love that technology. I just don't know anything. I just don't know enough about the others. But I am considering, like I said, moving about 10% of my portfolio into crypto. And if I do that, I will learn. I will learn, and I'll learn how to analyze crypto or learn what's better than, what's, or how to figure that out. If you could clarify, drop a little bit of a comment and point me in the right direction, that would be fantastic. But as of now, I don't know enough. New digital currency money transfer coming. I'm not sure. Yellen came out hard against Bitcoin. But I see the fear that the competitor of the U.S. dollar. Yeah. Well, listen, man. There's 1.9 trillion reasons they just showed you 2 days ago, 3 days ago, why you should be having some money in Bitcoin. They're diluting our money. Badly. They're just printing. They're not even allowing a bear market. Like, they're just stepping right in. Just saying no bear markets. Throw money at it. And that's great, but what's backing that up, man? It's literally paper at this point. And to the extent they printed money, it's like, I get it. People needed money. We were in tough times, right? Nobody wanted this pandemic. People don't want to struggle, but $1,400, that doesn't even cover my rent or most people's rent. You're going to be paying for that over the next 5 years. You might as well keep the goddamn money, you know what I mean? And stop diluting it, but this is the path we're on. So Bitcoin will become more valuable every time they print more money. Every time. And I understand like some people's concerns, with Bitcoin, but I think a lot of it is confusion. I don't think a lot of people really know what Bitcoin is or understand it. I hear a lot of dumb answers. I hear people go, well, the government's just going to ban it. And you go, you're an idiot. Like, stop it. Knock it off. Like, that's never going to happen. And getting clear answers too is another problem too, because I had a hard time getting clear answers from anybody, because some people look at Bitcoin as a religion. You better not say anything bad about Bitcoin or blah, blah, blah. And then there's other people that are just such skeptics, and just totally against it. And, trying to cut in between all that can be difficult, it can be difficult to get those answers. But, from what I found in the books that I've read, the people that I listen to, and from what I've gathered, Bitcoin's probably the most badass technology ever created, ever, XRP, from what I have seen, has more bad PR than good. Best to do as much DD as possible before investing in XRP. Yeah, honestly, man, that's not even really on my radar. What will happen when the U.S. government comes out with their own coin? Well, this is the thing. They could try to do that. Totally. Definitely makes sense. But now you just centralize the decentralized network, and it doesn't work that way. The beauty of Bitcoin, Ethereum, and blockchain in general, and the only way that it stays really safe, it becomes very risky to centralize it. Now, you just said government, it's centralized. So it's a digital Federal Reserve. They'll never be able to protect that. You know what I mean? They'll never be able to do that. Also, it doesn't work that way. The beauty of Bitcoin, the beauty of Ethereum, the beauty of blockchain is the bigger the network, the peer-to-peer, we have the same interest. It's us. The network grows with us. And gets stored on the block, right? And the more users, the stronger the network, the more powerful the network. It runs more efficiently, it gets better. Which is so crazy. So crazy too, Bitcoin. Like, it automatically, like, it's just the opposite of the United States dollar. If you notice, Bitcoin cuts its numbers every 4 years. It cuts in half. The equations become harder to solve every 4 years. Like, it's the craziest technology ever. Just as a tech. Now, I'm not going to say here, don't go put your whole portfolio in Bitcoin. That's not what I'm saying. Don't put anything in there. Look at it like a penny stock, if you will, But I know my audience doesn't care. They like to buy shit like FRSX and, BNGO and all that. So why not Bitcoin? It's only gone up. It will continue to go up, especially as these governments. My big thing is that a government at some point, and I'm trying to think forward a little bit, a government at some point, the smart government, the smartest government in the world, is going to back their currency with Bitcoin at some point, and then all bets are off. I wish the United States would think that way and be that aggressive with it. Honestly, we're in $16 trillion in debt. They're printing money left and right. Like, they know any better. Just back your currency with Bitcoin, man. Ride it up to the top. This thing goes up to 200,000. Your debt's gone. Student debt, whatever they want to do. They want to give out stimulus, no problem, do it. But back your currency with Bitcoin. But what's going to end up happening, though, more than likely, is one of the countries in South America is going to do it, and that's going to set it off. Who says they can't? They're the U.S. government. Bitcoin wasn't supposed to be a thing. When does the most powerful government on earth just say, sorry, kids, we're taking over? Just a Canadian here. Well, it's decentralized. That no government could take over Bitcoin. They could try to, I guess they could say, okay, we're not going to use it, but it doesn't matter. One government is not going to change it. They'd be foolish to do that, by the way. You hurt yourself, but another country would just embrace it more. Its value would still just be just fine. The first country that X's Bitcoin out, yeah, but as soon as you say a government starts their own, it's centralized now at this point. Now you have a decentralized, centralized platform. How it doesn't work that it can't happen. It doesn't work. They've been trying for years. You don't think they've been trying? They can't figure it out because they're not smart enough to figure out you can't centralize a decentralized network. It's that simple. That's why they can't do it. They're trying to have the smartest minds in the world sitting there trying to figure out how to do this. Hence why Bitcoin might go away. I guess something new and better could come around. I doubt it, But I don't know, who do I know? You know what I mean? I'm just in the middle. I said, I got 3% of my portfolio in there. That's what I was willing to risk, That's why Bitcoin might go away. Yeah, I mean, you could totally. I guess it could, but I think that would be a pretty big error, for anybody, any country to go away from it. I think does everybody know what Bitcoin is and how it works, or because I don't see any scenario that a government would, even the U.S. government would say, we're gonna have our own and Bitcoin's gone now. Yeah, I don't know. That's the thing. Yeah, I mean, a government can make their own crypto kind of thing. I don't know what he means. Yeah, well, I guess if a government, I guess, made their own cryptocurrency, sure, but that kind of defeats the purpose. In my opinion, because the governments dilute, they inflate they inflate their capital, So I guess more will be revealed, right? My thoughts, or Bitcoin will be over 150,000 by the end of the year. It'll keep going up, man. And at some point, every S&P 500 company in the world and some governments will have Bitcoin on their balance sheet, which would make it really hard at them. And the longer this goes on, the harder it's going to be for anybody to ban it. It's becoming more adapted more than anything, right? What do I think of GICs? Bitcoin has limited coins, meaning it's less likely to be inflated. Yeah, no, there's 0% chance Bitcoin gets inflated. The crazy part about every 4 years, the amount of Bitcoins that are released, right? Like wherever in the ether or whatever, wherever they come from, the amount of Bitcoins that can be mined reduces by half every 4 years. The reason by that is because the equations that become that come to verify the transactions, they become harder. Like this was built in from the beginning, which is the craziest part. It's like I would just love to meet the person who made the technology. You know what I mean? And really, I admire it so much that way, even more than I couldn't argue with anybody as an investment because it is so speculative and so many question marks and unknowns. But as a technology, it's the most impressive technology I've ever seen. Like I think ever. And I don't know if anybody will beat it either, which is pretty wild, This is why Ethereum is going to rocket with Rule 1955. Yes, I own some Ethereum. I own 2 tokens. I love Ethereum too. I love that. And I expect some big companies maybe to tokenize using Ethereum. I could see Redfin or Open Door or one of those companies doing something like that, tokenizing real estate with Ethereum, And the reason for that also would be, if Open Door wanted to tokenize real estate, I don't know how secure their network would be with such a small, it's a small, small. It'd be a small network, so it wouldn't be secure. They would want to be attached to Ethereum's massive, impenetrable network. Yes. Yes, it's a currency. But I look at it as a currency, a store of value, and an asset, a secure, whatever you want to look at it. Bitcoin could be all of those things, any of them, whatever you want, however you want to look at it. But it doesn't have to be a currency. It could be a reserve currency. Another interesting fact too I read was the average currency lifespan is something like 17 years. How old is the U.S. dollar anyway? Like it's pretty much time, and I'm wondering too. That's the other thing too is like I know these people aren't that stupid, Like maybe they're crashing, maybe they're doing this on purpose. I don't know. I hope they're doing it on purpose. Look, XRP is interesting, but here owners are sketchy, and that makes me weary. XRP. That's Ripple, right? And I think you said that was Ripple or Stellar or something like that. I got to look into that. And again, if you have any reading material that could get me started, like on like how to figure out crypto a little bit, like why is Stellar better than Ripple, or why is Ripple better than Stellar, like that kind of thing. Why? Like what? Okay, all right, yeah. What? Like how do I find out what's better than what? Like how do I pick the growth crypto? You know what I mean? Like how do I find that out? That would be my question. Like, how do I assess that? How do I analyze that? Are they all like? Is every one of these things have a similar working process to Bitcoin? Scarring retailers out. Don't be foolish. I don't know what that means. Scaring retailers out. Don't be foolish. Yeah, I don't know what any of that means. How about Dogecoin? I don't know. It's cheap. Like I said, I don't know how to look at that stuff, man. This is what I do know, though. I saw that Mark Cuban wrote a tweet that said the Dallas Mavericks did 20,000 Dogecoin transactions in the past, whatever. It was just like yesterday, the day before. Go on Mark Cuban's Twitter page for the exact quote. Research white papers on the crypto. Okay. So I got to just take what other people say and just take their word for it then. Yeah, I don't like that. I don't like. All right, so we're almost an hour in. I'm gonna wrap it up in about 5 minutes. So if you guys got any more questions or some stocks, maybe you guys want me to take a look at, maybe I could. Where's my pen go? There it is. If you guys want to just name some stocks, maybe I could look into them, start making a video about them. What stocks are you guys looking at? Did you guys add anything? What did you guys add? That's what I would like to know. What did you guys add on this last dip? Like when the stocks were dipping last week? That's something I would like to know. Dogecoin is interesting to me. Popularity and meme value alone could send it upwards one day. Yeah, definitely, man. I agree with that, Richard. The memes and Elon always was talking about TikTokers and celebrities talk about it quite a bit. And white paper is like a prospectus, and you need to understand the technology. You can definitely be total BS. No, yeah, no, that part I understand. But like what you're saying though, like the white papers, that's what I fell in love with the Bitcoin because of their white paper, the Satoshi Nakamoto white paper. So I guess you're right, but I'd more or less like I like the fact that with stocks and securities that I can look at metrics, I can compare them to other metrics, price to sales, and all throughout the video I've been talking about valuation models. Like I could build a model to figure out exactly what the company is worth. Like how do I do that with crypto? That would be my question. Outside of Ethereum and Bitcoin, which are the two. My bad, I didn't know you knew about that. Oh yeah, yeah. Oh no, no, yeah, yeah. Well, the white paper part. No, I didn't know every. No, I didn't know. Oh no, I had no idea that every crypto out had that. I didn't know that. I thought that it was just like a Bitcoin thing, or an Ethereum thing. I didn't know that. I guess so. White papers would be like the S1, right? Like, so that's the way it seems anyway. But I would more or less like want to know, what metrics am I looking at when I'm looking at a crypto? Like, what is the growth driver? Why all of a sudden is this going to go up? Opposed to this one, like what is moat in crypto? Like what am I looking for? Ripple lawsuit scaring out retail investors. Oh, I see, I see. Okay, well, that's what I meant. Well, and again, I don't know, man. Cryptos are, like I said, if I understood a little more, but like I said, I got 3% in Bitcoin, 2% in Ethereum. I'm thinking of going a little bit more and maybe dipping my toe and maybe looking into some of those, man. If I could figure it out, I wish somebody can. I wish I had. I could pick somebody's brain who's like a real expert about this stuff, like a real clear expert on cryptos outside of Bitcoin and Ethereum. Yeah, Dylan did make some really good comments today, right? And he that's a name I haven't seen yet. So are you? I hope you. If you're new, I hope you subscribe, and I hope you plan on coming back. You know, definitely lawsuit for the fact that most exchanges aren't trading XRP. Awesome. How's your portfolio make out, Sean? How you doing? Like with everything. Did you make a nice little comeback today? I think I sent you a message on Twitter a little earlier to see how everybody was doing. Um, at least the people that are good with me. ETFs, any comments? I'm sub, bro. I like the content. Oh, awesome, man. Thank you. Yeah, that's awesome too, man. Because like certain people that come in here quite a bit. Yeah, weeks been bad. Um, and especially when they're knowledgeable, I really like that. Like Sean really knows a lot of stuff, and there's another guy that comes here, Deco. He knows a lot of stuff, and I always that's always a big compliment to me. Like when I see like, all right, cool, man, this guy really knows what he's talking about, and he's part of the audience. That's awesome. Came up overall 8% today. Awesome, man. So you're down 25%, but came up 8% today. Okay, man. Hey, plugging away. Back in the green though. Yeah, man, I got hammered, bro. I was down 42% or something like that from my all-time highs anyway. I think I got 17% of that back today. Thank God, Oh. PS PSTG, yes. Yes, Richard, me too, man. I was hammering Pure Storage. I love that one. I'm just playing devil's advocate a little bit, but I'm still learning like MJF. Yeah, man, that's it. That's it. That's all we can ask for, man. Bounce ideas off of each other, play devil's advocate. I think everybody's all about, all the best thing about it though is whatever's going on now, right? Like for long term, like perspective on the stock market, like I don't know what you guys are planning on, but like I plan on being involved in the stock market over the next, 15, 20, 30 years, So even something complex like early on in my process with this, I've been like, why would I want to learn how to build valuation models? I don't do this for a living, right? Like that would kind of been my approach. But now I'm like, well, if I'm going to do this for the next 30 years, why wouldn't I want every tool available? Why wouldn't I want every tool available, right? Yeah, this is definitely a great conversation, Sean. I love it. Yeah, this is great, man. This is awesome. That's why I always plan on going on for like 30 minutes. I'm like, I'm gonna go on for 30 minutes, and then you guys get going, and you guys are awesome. You get me all fired up, and then I don't need much to get wound up, man. But yeah. So that's something that I definitely want. To be focused on is valuation, man. It's important, And then if the market does turn back to, if it goes back to like, 2020, way back there in 2020, If it turns back to that, then sure, man, I'll be all over YOLO plays too, man. I love it. I love them just as much as the next guys. Yeah. You know what, man? And I can understand that feeling because you know what my feeling was too? I was like, oh man, dude, like this is rough. How long is this gonna go on for? I tried to live stream here and there. I stayed in touch with people. I tried to be accessible on Twitter and stuff, but it's like I don't feel right about making content right now too, and telling people how to navigate in a market like this. I always do my best to in each video to specify, especially when I talk about like volatile, like these stocks are the stocks I talk about are volatile. So, I got hit hard, man. I got hit hard for sure. And if this keeps happening, if these corrections happen, like growth investors get rocked, But also look today, like Tesla, for example, that was a big reason my portfolio bounced back the way it did. Is that I have a pretty decent sized position in Tesla, Pure Storage, Roku, and PayPal, and they got crushed, man. They got crushed, but they all did well today. So hopefully we get back in that. Settling the notifications you were coming on really helped. Do you do that each time? Sometimes they don't seem to work for me. I was able to plan so I could be here just as soon as enough. Yeah, I learned to have more discipline with taking profits when they're there. Yes, yo, that was another thing too, especially with particular stocks. Richard, like penny stocks, right? The FRSX types, the Zooms, like those stocks. I was like, I'm gonna hold. And now I'm looking at it and I'm like, you know what, man? I should have taken my profits when FRSX was $11. You know what I mean? I got the stock at $1. Like I 10x my money. Like why did I hold so much? Because I kept telling myself, you can't 20x if you sell at 10x. But that was straight greed. And with a couple of little, if I knew what I knew today, I would have seen clear things in their balance sheet specifically that would have told me like $11 is a fucking steal here. Ooh, sorry for I hope YouTube doesn't flag me. That $11 is a steal here. Get your money, take your money and go. You know what I mean? Like so there's certain stocks like that. Like I'm not taking profits with Tesla, but with low cap stocks or micro cap stocks, nano cap stocks, the next time I get in them, when the profits are there, I'm taking them. I'm definitely taking them. I wanted to go in XRP. I saw that video and sounded very interesting about it, and it could be legit. But a majority of the videos I have seen are negative and have good points, so I am weary. But if your DD is good, diamond hand that. Yeah, I agree, man. That's why, in my content, I at least try to get across, keeping a notebook on you, do your DD by your computer, right? Writing this stuff down, writing it down and keeping it by your laptop or whatever, or if you're trading it from your phone, I don't know. NFTs, I just started. It's funny. I'll get to the NFTs in 1 second. And Sean, thank you for saying that before, man. I really appreciate it. I forgot to comment. 88 coins might be something to watch. People have thoughts on it. I bought 100,090 cents and sold that one. Wow. There you go. That's good. That's a score, Sean. NFTs are something that are who knows, man. It could be like a fad, right? NFTs, they could be a fad. They could also be something huge, If the right people and the right, gets the right momentum, I could see that being, gaming. Can you see that in gaming? But I could also like see it being one of those things like a year from now where we laugh at it. We're like, remember like NFTs pump faked us? You know what I mean? All right, how does the valuation method work when it comes to something like FRSX? When they have high room to growth but currently operate at a loss. That's what I'm saying. Okay, great. That's a great question, man. And again, remember, I'm not an expert. I'm not a financial advisor. But I have been looking into this book right here, right? This is a book by Aswath Damodaran. I got this at my local bookstore for 50 cents. It's this is the NYU University edition, right? So this is what they were teaching at NYU when Aswath Damodaran was there. So, I've been digging into that quite a bit and like copying some of the models and seeing what models work best for growth stocks, right? So FRSX would be a growth stock, obviously, and pretty much what it says in here would be like price to sales is a really good place to start with growth stocks. You want to look at price to sales, especially they're going to be trading at a high price to sales because they don't have much sales right now. So that would be, that's a difficult one, pre-sales. But what you'd want to do is you'd want to, what I would do, let me just say what I would do. I would look at their total addressable market. I would assign a market share, a realistic market share that they could get. And I know they have 3 subsidiaries, right? So they have QuadSight, they have iNet Mobile, I believe, and they have RailVision. So they have a pretty big total addressable market, right? With those three branches. Um, market share is tough to gauge, but I guess you'd have to figure out a growth rate. What kind of growth rate are they projecting? 15% or closer to 40%. But you would have to assign a growth rate and then, do some math and see what, like Laser or other companies like them are trading at price to sales, and see what kind of growth that they would have there. That's a really tough one, actually, though. That's what I'm thinking about it because they have 2 subsidiaries, and I don't know how much they own. They own, I think, like 18% of iNet, I think, or something like that. That's what you'd have to do first. First, find out exactly what they own from iNet and exactly how much they own of RailVision and QuadSight, and then get those revenues separately. That would be where you start. I like that company. I really do. It could be rocky. Like it could be rocky, but I could see that being a pretty big opportunity. They could be big, man. Um, Still 10x value. I mean, at some over 10 years, could still be 10x value. When you look at the markets they're in, um, those markets are big, man. And then you think of the military. You can think of, QuadSight could go into the military, could go into drones, it could go into robots, it could go into EVs, self-driving cars. Same thing with iNet Mobile, could go on bikes and cars. I mean, and then with RailVision for transportation. I mean, that's not necessarily a huge market, but they're in 3 pretty big markets. That could go pretty high if they captured market share and got the right partnerships and distribution deals, which it seems like they're doing. That could go pretty high, for sure. I could point right to 2 partnerships with FLIR. 3 partnerships. FLIR, great company. Their sensors are made with QuadSight, integrated. NVIDIA, the Jetson AG specifically is integrated. The QuadSight is integrated in that. NVIDIA is one of the best companies in the world, man. They don't integrate garbage products. They integrate the best products on the planet in their stuff. So what does that tell you? It tells you that QuadSight's badass. That's what it tells me. Roblox, yeah. For long term, I like Roblox too. I like Roblox a lot. I like Roblox a whole lot. Especially because, they're building like a whole experience, man. I went through their S1 and I was looking through I guess their deck, and it doesn't even seem like they're talking about video games, man. They're talking about like some kind of, like a part of your life, like part of a life almost. It's really wild, and I guess people are okay. And what I really liked about Roblox is they're very smart. They captured a young audience, right? Yeah, for Roblox. What are you getting at tomorrow's opening or waiting, Mike? Or are you getting in at tomorrow's opening or waiting? What? Which company am I? What are you talking about? FRSX. Or Roblox. So they captured a young audience, and they're moving with it. Like they're not just gonna keep making kid content. They're making content now for age appropriate. Like because they know we have a huge audience. We're not letting this go. They're growing with it. That's brilliant on their part to continue. Yeah, they're gonna keep making kid content and all that, but they're growing with the audience, and they're gonna have a lot of success over a long period of time. I think over 10 years, that's a good idea. you know. Now again, though, now keep this in mind as well, and this goes across the board, especially for SPAC investors. Keep this in mind. Ideas, right? I would like equate it to the prototype, right? So the prototype of the Nikola Badger, right? Looked amazing, didn't it? Right? The Nikola Badger prototype looked great. You know, prototypes or ideas, one thing. Getting cars to manufacture, like Tesla, like to manufacture, even Lucid Motors is talking about prototypes to manufacturing is one different thing. So an idea is one thing, running a business is another thing. So some of these SPACs, I fear, of course, there's going to be some good ones. There's going to be some great ones, some legacy ones. But I fear that a vast majority of them, a vast majority, are going to be garbage. You know, bankrupted companies. That's my fear, and it's going to be very hard to select in the early stages which ones are going to make it and which ones aren't. So, you know, the approach that I'm trying to take now with SPACs, and again, I've been buying SPACs left and right. The approach that I'm trying to adhere to is it has to be pretty special for me to add it at this point. But again, that's just me. I think it will run up one day, but for a short-term swing profit, but also add into my long-term portfolio. They have their own currency. Okay, Roblox. Oh, Roblox will be a digital hangout spot for teens, high schoolers. Yeah, man, that's exactly right. It's cool, man. That's what I mean. They're growing with their audience. They're growing with it. I love that. I'm buying on one day of IPO. What's people's thoughts on buying on day one of an IPO? All right, Sean just asked, what are people's thoughts on buying on day one of an IPO? That always seems to come down. No, that's a good point, Sean. Really good point. But you know, the last two, right, was like DoorDash and Airbnb and Snowflake, I think were the last three. And when they IPO'd, they didn't come back down. They didn't come back down. So also consider when they came out, right? They came out with friendly markets, bull markets. You know, how much influence did that have? You know, I wonder, you know, I'm anxious to see. Under normal circumstances, Sean, though, you're right, man. You normally get an opportunity to, you know, get it a little bit lower than its IPO price at some point, usually. But, you know, I guess it's still too, I'm talking about Snowflake, Airbnb and DoorDash, and saying they just shot right up. I mean, I guess there's no guarantee that they don't fall below their IPO price, right? At some point. I doubt it. Well, I don't know. Maybe DoorDash will. I don't know how long they're going to last. I would, never mind. I was going to say I would short that stock, but no, never mind. I wouldn't short anything. But, that DoorDash one, I have no idea why that happened or how that happened. And I have no idea how it's still up that high. I really don't get it. But I think my prediction with that one is there's going to be a whole lot of sad people holding a bag and going, DoorDash, man, we're supposed to go to 250. What happened? You know what I mean? They're down there like $30 a share. Let me see this real quick. 45 is 30B value, and it is valued at 4. Okay, let me see here. Did I miss something? MJF, how do we find those legacy plays? I don't know. That I don't know, man. I'm working on it. I'm working on it. You know, this is the way I was looking at the SPACs, man. As I was looking at them, as I was saying, leadership was big because a lot of it is forecast and projection. So leadership, you know, is the people making this happen. So trying to understand them, like their pedigree, would probably be a solid indicator. You know, but again, I was riding Chamath pretty heavy. But I told you, man, I'm rethinking my whole investment strategy, everything about it, you know. So, you know, and I hope you guys are like, you know, I hope everybody, man, I hope everybody's doing the same thing, constantly evolve, constantly change, you know, and adapt with the times, and constantly keep asking yourself, is this still working for me? Like, am I still happy with this? Has this ever worked for me, right? And if something's not working, you know, take it out, cut it out. Trial and error, right? That's basically Unfortunately, that seems like what this whole process is, trial and error. And if you could speed up a few learning curves, that's a big asset, right? In my opinion, anyway. So valuation was a big topic, right? I thought it was a good one. I thought we had a good discussion. This was a lot of fun, guys. Thank you so much. And by the way, too, it's a lot. And I've been seeing too, Richard. Thank you so much for being on. I've seen you on here like twice or three times now. I appreciate it. I love your ideas. Sean, as always, thank you, man. You're the best. Dylan, man, that you were a great addition to tonight's live stream with some of your feedback. I hope you if you see this, I do this sometimes, these live streams, and if you see them, I hope that you join in. You brought a lot to the conversation, so hope you keep coming back. And again, if we ever disagree on anything, dude, like never, if I say something wrong or I misspeak or you think I'm wrong, I take no offense, nothing personally. Feel free to call me out, put me in my place when I'm out of line, and vice versa. I can only, I'm always going to try to do the best I can, right, to be prepared and bring good stocks. But sometimes I'm a person, I'm going to be wrong sometimes, right? It's going to happen, and, just thank you guys. Thank you guys, everybody, really. Everybody who's on. If you're still on the live stream, please smash that like button. I'm going to get ready to wrap it up. If nobody has any more questions, my next video is going to be about Abcelera, which is ABCL. I actually have it recorded. I just have to edit it. In that, I gave a little sneak peek of the valuation model that I used to get my 10x. On tonight's video, I don't necessarily get into it that deeply in this video, the one that's coming out. But if you guys wanted to peel some layers back and look into it, the ticker is ABCL. The S1 filing, you won't find the deck on their website, but you can find the S1 filing just on the SEC website or whatever. I really like the idea. I believe it's innovative. They work with Bill Gates and Melinda Gates Foundation. They have contracts with Novartis, Pfizer, DARPA, and they basically develop drugs with other biotechs and then receive royalties. Really interesting business model. It kind of separates them from its competitors. But I love this stock, man. I really like it. It did well for me on its first day is in my portfolio. So, that's really that. Trying to just think. I think that's really it, man. So if you guys are still watching, thank you so much. Thank you so much for being part of the channel. Follow me on Twitter at MJF_invest. And feel free to DM me, send me material, send me articles. Let me know, let me know what you guys are reading. If you have any requests, stuff you want me to make videos about, if I get enough, of the same response, then I know what the audience wants. But especially like the people in this kind of live stream, like the main audience, you guys want. If you guys like, I can definitely do what you guys want. So send me a message. Let me know. Appreciate you guys. Thank you so much. Definitely going to be launching the Patreon very soon. Keep an eye out for that. I will let you know. Thank you so much for watching, guys. Have a great night. Thanks, Sean. I appreciate it.